Let's go to Alan's favorite component of the show, Ask the Experts.
Hey, Joe and Al, I've got a question for you. If inflation continues to rise, should I invest more in bonds or think about changing the way I invest my money?
That is a very good question, Alan. And so here's another thing. I mean, this is market timing, if you will. Is like you get these market indicators. It's like, oh, if inflation's going to continue to rise, should I completely abandon my overall strategy and do something different? Should I get into more bonds or should I not buy stocks or what should my portfolio look like? Guess what? Inflation is a part of life, right? You have to plan for that. And so as cost of goods and services increase, that's why we invest in the first place, to outpace inflation. So should you buy more bonds or should you buy more stocks? I'm not sure what that answer is without really understanding what your goals are. What is the demand for the portfolio? What is your tax situation? What is your capacity or tolerance for risk? That really helps set the stage. I don't think you change anything because inflation goes up and then it smooths out, goes down. I mean, that's just a part of life. So no, I would not abandon any strategy whatsoever just because we have a little peak of inflation. Next question, Alan.
While the market is high, my husband wants to cash in half of the investments in our retirement funds and invest that money in gold until the market levels out. Is that a good strategy? We're 2 years away from retiring. This is from Jill in Carmel Valley. Joe, I'll start with that question and to sort of piggyback on what you just said. Globally diversified investment portfolio should be designed to handle your goals and your needs in all kinds of markets. Market timing, although it's not impossible to make money, the probabilities are you'll do better just staying invested. It's very hard to time when the market is going to do a correction, and it's very hard, even if you get that right, to when to get back in. So I would not advise that even a couple of years away from retirement.
You know, this reminds me of 2008. I mean, the markets are up, and then all of a sudden it's like, here, let's cash out and go to gold. The expected rate of return of gold is 0. Right? Gold doesn't grow on its own. So if you think financial Armageddon is coming down the pike, I would not suggest selling half your portfolio and go to gold. If you think financial Armageddon's coming down, don't buy gold, buy ammunition, right? Buy guns, because that will be a lot better for you than a gold nugget.